So today we're going to talk about Sofi. Sofi is a stock that I own and it's a very good performing stock for me this year. I think I'm up around 40% up on this position, and I haven't really talked about my positions individually and why they've done so well this year and what they potentially could do in the future. So with it being such a good year for me personally with investing, and hopefully it has been for you guys as well, I thought it'd be a good time to look at some of the stocks I own, talk about why they've done so well this year and what potentially they could have in the future, and potentially it could Sofi break into the $20 range next year and what would be the catalyst for that. So I hope you find this video useful. If you could hit the like button, and it is my second time recording this video. The first time, typically the microphone did not work, but we'll get stuck onto Sofi stock. Before we do look at Sofi, just to let you know, if you are a Patreon member, I just dropped an exclusive video, which is the Team 17 stock request, and I go through my thoughts of Team 17 on there. The video is about half an hour long, so do give that a watch if you are on the Patreon. If you do want to join the Patreon and support the channel, it's only £5 a month, the price of a pint. You get 2 exclusive videos a week. You get a Discord on there as well to talk to many people about stocks, including me, and you also get to know my live buy and sell alerts. So I give you all that for supporting the channel. It is the highest subscriber to Patreon out there on the YouTube stock market scene, so do go check that one out and check that video out as well. But let's get stuck onto Sofi. So Sofi has been a very good year for the company. The stock is up 107%. Now, I first started buying Sofi in May time. I started buying the stock in the $4 range, and since then the stock is up 96%. So I could be up over 96% on this position if I wanted to be, but for me, I don't want to just show, oh look, I'm up 90%, 96% up. I don't want to show off all these percentages. For me, the main thing is being up more on a dollar amount. So even though I could look a genius being up that much on Sofi, I'd rather make more money. So when the stock did start having a few dips, I bought more and I bought more, and I started averaging up on the position. And still, even with me averaging up, I am up 40%, but I want to make sure I don't just water the weeds. I want to make sure I'm watering the flowers in my portfolio, and I believe Sofi could be that. But it's had a good year nevertheless. It does look a little bit choppy though, and we'll talk about why the chart has been so choppy for the stock this year and why it's been so hard work for it to get from $4 to $9. Now, Sofi itself is a finance company, a fintech platform offering many products, and what it's trying to do is be that unique place where you can get everything you need from a finance point of view through the one platform, and you get good deals on all the products that they offer. So it's kind of been a disruptor in this kind of legacy financing space. They offer personal loans, banking, credit scores, mortgage loans, student loan refinancing, which this company was mostly known for only a few years ago. Now that has been paused and it is starting to come back, which I believe is not being priced in at all to the company's future projections, which is a major catalyst that's going to be coming back, as well as many other products that you can see here. Now, the company itself came off a very good Q3 update, and it did jump on the Q3 earnings, and it has beat on expectations once again. It's done this multiple times. It's a company that does under promise and over deliver, and they like to be conservative on the guidance. Beat revenues, beat EBITDA, raised up the guidance. Very strong Q3 from the company, and also what they are saying is they're going to be gap profitable in Q4. They've said this all year, so this is a company that is now going to be growing at very good rates. They're actually growing 33% at the moment this year, and also they're going to be driving now a profitable company as well, and they're going to see a full year of profitability in 2024, which I tell you, that's a major catalyst. When you've got a company that is growing at 30+% and then you also start growing profitability at the same time, this is where stocks can go on very good runs when they do that. And the other thing as well is that what people aren't pricing in is the return of the student financing. Is that Sofi, when they gave their guidance, so you can see the guidance at the moment is for growth to be a little bit slower, which I don't think it will do. I think this will be more towards the 30% range. But when they gave a lot of their guidance as well in the last earnings, they basically said, look, we're preparing that the Fed are going to carry on increasing interest rates, and they were worried we were going to hit a recession. That's what they've done with their guidance. Now, obviously, as we've seen in the last few weeks, is that we aren't going to see the Fed hike up interest rates. We're not going to see the Fed keep interest rates for longer. They're actually going to be cutting them. So the guidance that Sofi have is for a bad economy. So if you have a good economy, people are going to be taking out loans more, buying houses, potentially going to make those bigger purchase items. Then Sofi at the moment has conservative guidance for an economy that is going to be total opposite to what is going to happen, which is also another great tailwind going into 2024. Now, like we said, the company has great history of beating expectations. If you look at the EPS point of view, they've beaten EPS so many times. The only time they didn't beat was on Q3, but that was because of an impairment charge. If it wasn't for the impairment charge, they would have beaten once again. On a revenue point of view, you can see here on the last couple of quarters, they've on average nearly beat by 20 million, which is absolutely insane. And once again, I think they're setting themselves up for a very good beat in 2024 as well. So when you've got a company growing at these rates, profitable, or going to be profitable next quarter and profitable in 2024, very conservative guidance, and they have beaten so much on the earnings reports, why is the stock being so choppy? Now, I think SoFi had such a choppy year, and why it's been so hard for it to finally get the returns in is because of the shorts. It is quite a heavy shorted stock. If you look here, the short percentage of float is 16%. That's quite high. That's quite high for a company that is around about an 8 billion, 9 billion company. You don't normally see that, especially around a fintech platform. So why is that situation happening? Well, I believe a lot of it goes down to the CEO. The CEO is very, very good. Anthony Noto is a very, very good CEO and founder, and he knows how to control Wall Street. He knows how to set the bar low and beat their expectations by a lot, as we've shown. And the one thing he's saying is that we're having so much success because we're stealing shares from the big bank. They're taking market share from the big banks. And that's the success of where the company is doing so well at the moment. Now, if you're going on to Mad Money and you're saying we are stealing shares or market share from the big banks, who controls the big money in the stock market? It's the big banks. So if you're losing market share to a company like SoFi, sure, there's not much you can do from a market share point of view. But if you've got the big money, could you control the share price a little bit? Could you have the short interest on it? Could you put maybe false stories out there to try and manipulate the share price a little bit? I think so. And I think the reason why it's been so hard for SoFi, even though it's done so well this year, is because the big banks are trying to go, well, you smashing us on a financial point of view, but we can control your share price because we've got the big money. And I feel like that's going on a little bit with SoFi. And the example with that is that in Q2, the shares hit a 17-month high after Q2 results beat estimates. And if you look at the share price point of view, you can see the big pop up here on the share price. It was a major jump in the share price, 22% up. But yet the following few days, it didn't only just go back to where it was. It dropped and it dropped and it dropped, and it actually fell down 40+% since the big peak on the jump of the Q2 earnings. Nothing financially changed with the company for it to drop 40%, but it dropped 40%. And the only way you can drop 40% isn't between me or you that are watching this YouTube video. The people that can move the stock that much and potentially want to move it and make it suffer a little bit because they're losing financially is the big money, is the big banks. So even though Anthony Noto is saying we're doing really well because we're taking a big share from the banks, at the same time, I feel like this company should not have suffered as much as it has on the share price. This should be more of a straight line, but once again, the banks are doing their best to kind of make SoFi suffer a little bit. And another example from that is when you look at the insider point of view. So much this year, there's been so many stories about, oh, look at all the insiders that have been selling the company this year. But yet, when you look at the buying, who's been buying the shares? Because there's been a lot of buys at the moment. If you look at the history of who the buyers have been, a lot of the buyers have been the CFO that's been buying shares. And who's the biggest buyer that you'd want to see in the company? It's the CEO and founder. And what has he been doing? He's been buying and buying and buying shares. So once again, you see once again the negative narrative that's being pushed against this company about insider selling. But when you look at the buying, who's the buyer you want to see? It's Anthony Noto. But once again, that gets no credit. So even though SoFi has had a good year, it's definitely been a choppy year. And I guess what's the big thing is, what can SoFi do now to push up to that $20 stock in 2024? Well, I think, like we said, we've got to see them do what they've historically done, which is set the bar low, which I think we've seen them do. We've seen them say, like, we're preparing for a bad economy out there. We've seen them being very conservative on the return of student loan financing. And with that combination is that analysts have set the bar low. And if they can be on an EPS point of view, if they can be on a revenue point of view and really hike up that revenue, once again, we'll see the good jumps on earnings. And once again, that will will once again put pressure on a lot of these shorts. So we want to see them once again financially deliver and deliver way above their expectations that they are predicting at the moment for analysts. And as long as they can keep doing that, what will happen is their share price will reflect that from a valuation point of view. And as long as they can grow at 30+%, and if you're a company that's growing at 30+%, you then do turn profitable. Granted, it will take them a while to get up to big scales of profitability, but if they can very quickly go from 70 million in profitability to 259 million profitability, and if you look at a free cash flow point of view, sure, there's one analyst here that's only predicting it, but you know that if they start getting up to 500 million in free cash flow, you look at the company right now, that's going to put them towards a free cash flow point of view of around about 18 times free cash flow, which isn't bad at all for a company that is growing as fast as what Sofi are growing, that are driving up the profitability as fast as what they are doing. This is where very quickly this share price can rally, and as long as it can rally, it will punish those shorts and it will go higher. So Sofi just need to keep doing what they're doing. If they keep executing like how they are doing, if they keep beating like they did in Q2, like how they beat in Q3, and keep raising and shock analysts on Wall Street, this company will get reflected on the share price and we will see it rise. And personally for me, could I see Sofi touch the $20 mark in 2024? I think it could. I think if they do beat these numbers and they hike up on the same level that they did this year, I think we could see $20, but they have to execute to perfection. And at the end of the day, if they don't execute to perfection and they still do these numbers, I think the stock should still do very well. So it's in a really good place, Sofi, and I think if you are someone that did, like me, start buying in that $4, $5, $6 range, I think you're sitting on a stock that could potentially do very well in the next few years. And I think that 2024, once again, once the student financing comes back, once Wall Street realise how conservative they've been, and that's backed up by the ownership and the insider buy-in from Antinoto, I think that once again this could be a company that once again shocks Wall Street in 2024. And I think that if you were buying this at below $5 or even $6, I think you'll do really well from this one. So yeah, wanted to talk about one of the winners on the YouTube channel from this year, and hopefully over the next coming few weeks talk about a few more of the winners. You know, it's been a fantastic year. It'll be a good time to reflect on some of the winners and where I expect them to go into 2024. So well done to any Sofi shareholders. Hope you enjoyed the video, and I'll see you in a bit.